What's good, guys? Welcome to another video on my YouTube page. In this video, I'm going to be showing you guys how I find high probability setups, my strategy being explained, the set and secure strategy being explained, and how I find high probability setups. But before we start, I would like you guys to like, share, and subscribe to this YouTube channel so the YouTube algorithm can recommend this video to other struggling and beginning traders. Okay, and with that being said, let's get into the video. Alright, my name is Alabanji. I've been a trader for the past 3 years now, and one of the pairs I've traded the most for over a year and a half now is the GBP USD pair. Why did I choose GBP USD pair? Because so far for me, GBP USD has one of the most cleanest structure you can see out there. In my own terms, I love the GBP USD pair because it's very, very clean. And today I'm going to be teaching you guys how I find my entries on GBP USD. And remember, this is only for GBP USD. I don't recommend using this strategy for any other pair, though it works, but based on the fact that I created this strategy off of the 15 minutes, off of GBP USD time frame, and I recommend you to also use it on GBP USD. So anytime you want to trade GBP USD, I recommend you use the Setandsecure strategy. Alright, so and with that being said, let's get into the video. Alright, so you using the Setandsecure strategy, you need three key things if you want to use the Setandsecure strategy on GBP USD. First of all, the first thing you want to do is go into your indicator and type the word sessions. Right, you need to if you haven't favorite it, you need to favorite it. Type the word sessions. That's the first thing. It's going to appear on the top left corner right here. Sessions. Now, why did you tick this on? The reason why you tick sessions on is because you want to know the session you are trading. A lot of people don't know the session they are trading. You just wake up in the morning, enter the trade, wake up in the midnight, enter the trade without knowing the session. Right. So we have three different type of sessions. We have the London, New York, and Asia session, but we have one of the most volatile sessions, which is the London and New York session. These two sessions are very, very active because traders are open and banks are open, and there's a lot of transaction going on, and which affect the forex market, right? So you want to be trading in these two sessions, either London session or New York sessions. You don't want to be trading anything outside from this spot. So once you've gotten into the session, you have to click on the session. I'm going to see a settings icon, right? So I click on it, and you want to only tick the New York and the London. Then you also untick the Tokyo and the Asian session, right? So we have no business in the Tokyo session and the Asian session. We have business in the New York and London session. Is that understood? Right. Once you've done that, what you need to do right now is to identify the structure of the market. Okay. Now you don't need to try to overcomplicate things and start to assume. No, you just have to wait for sessions to get open. Right, for sessions to get open. So the first thing I do right now is identify the structure of the market. How do I do that? First of all, I close the sessions. Then I try to understand what structure is the market creating. So let me show you guys what I mean by that. Let me replay this chart right now. Now I want us to understand how structure works. On GBP USD, if you want to understand structure on GBP USD, the best time frame you can use is 1 hour time frame. Bet me, if you want to trade using the sessions, the best time frame you want to use is the 1 hour time frame. I'm speaking out of experience of over 2 years experience right now. You have to use the 1 hour time frame. Reason being is this: 1 hour time frame, each hour it creates a good candle, and you're not going to wait for a long period of time just for a structure to get created and stuff like that. So you want to use the 1 hour time frame if you want to be using sessions, right? You have to use the 1 hour time frame, because if you are using a 4 hour time frame, you are going to wait for a long period of time, and you are going to be holding your trade for a long period of time also. So using the session, you enter the trade during the session, and you also you also eat full TP during that same session. You get what I mean? You enter the trade during that session and you get out of the trade during that session. You don't want to enter a trade in London and you want to go to New York and you hold the trade in London, the business end in London, you have to find another setup again in New York. So you want to know these things before you use the Setandsecure what strategy. So the second thing is to understand your structure. And using the 1 hour time frame is the best thing you can use to understand your structure. So as you can see on the screen right now, we are in an uptrend. Then if I'm to play this out, as you can see, we are in a what? We are actually in an uptrend. But what did you say right now? Before you say anything, we what we call liquidity sweep, right? This candle here is a bullish candle, a bullish wick. But as you can see, this market, before this market moved, before this market does something like this. As you can see, this market is actually, it's created a bullish and then it's closed as a bearish candle. These are called what? Liquidity sweep. So this is not actually a valid liquidity sweep yet until we see two other things. And if you have to look at this, what time is this? This is 3 p.m. and this 3 p.m. signifies New York session. In my current time, Nigeria, New York session opens by 2 p.m. Right? So once it's 2 p.m., as you can see right now, to 14 o'clock, that is 2 p.m. This is where the London session gets created. The London session gets created by this time. Now, what do we want to look at? We have seen that this structure is a bullish structure, but we want to be concentrating more on the sessions and not the structure. We want to be concentrating more on the session and what is the session doing. As you can see, the session had the liquidity sweep, and this is the third thing you need to look for in every session. Liquidity sweep. Don't enter a trade if you don't see a liquidity sweep. You can see the liquidity sweep on the 1 hour time frame and 15-minute time frame. You can also see it on the 5-minute time frame. Right? So you have to see at least a liquidity sweep before you enter a trade. Now, as you can see, this market swept this liquidity, but what is the confirmation? There's no confirmation right now, but we've seen that, okay, this is a bullish structure and we have a liquidity sweep. And most of the time, if a liquidity sweep is correct and is a strong liquidity, market tends to reverse off of the points. So we mark this point out. And what are we going to do? I'm just going to wait for an impulsive break. And looking at this candle now, this is the 15-minute candle. 15-minute time frame, I mean, 15 minutes, 15 minutes, 15 minutes. This is an impulsive move. The market moved drastically to the downside. Now, off of this point, we want to be patient because now market has already gotten a, what's it called? A change, a break of structure right here. BUS. Right, so this is the next protected low. And what were we thought about a protected low? If a protected low gets broken, it actually turns to a change of character. Normally, we would have waiting for this, but due to the fact that we've had a liquidity sweep, I love to enter my trade quick and early, so I can utilize the what's it called? I can utilize my risks to reward. As you can see from this 5-minute time frame, remember we are in New York sessions. New York session starts here, but we've gotten a liquidity sweep and we've gotten this continuous impulsive break. We also have a fair value gap right now. So normally, the normal thing we are meant to do is to use the fair value gap, inverse fair value gap. Stop loss should be above the liquidity points. Always use a stop loss above the liquidity points. The reason being is this: if this liquidity sweep is a valid liquidity sweep, market is never come to this point. Market can be so close to the S, but it's never going to take it out because that liquidity sweep is a very strong liquidity, and market is not going to come to that point again. So that is one of the best places to put your stop loss. Don't just put your stop loss randomly. Don't put your stop loss under a anticipated protected low. No, put it on a valid liquidity sweep. It can be 3 pip liquidity sweep and you put it there and it's going to be very, very strong if it's a valid liquidity sweep. I see most people put their stop loss in anticipated protected and stuff like that. That also counts. But you using the sessions, you want to put your stop loss on the liquidity sweep. The moment the market sweep a previous high or low, put your stop loss there. Once you've gotten your confirmation, put it there. It's very, very easy. It's 5% to 90% guaranteed that you're not going to get stopped out. Right, so we've gotten another fair value gap. Normally I will have entered this from this point, and my second way of entering it should have been a 15 minutes close below the protected low. And I'm to wait to see if the market is going to tap into the February gap, and I think it's tapped into the February gap already. Okay, let's see. Now it's tapped into the February gap already. As it's done this, I'm going to enter the trade. And now these are the three criteria. The first criteria was session. We are in what? New York session, as you can see. We are currently in New York session. Currently in New York session. The New York session is the box in red. The London session is the box in what? In blue. We are currently in what? New York session. The second thing we are going to look for now is the liquidity sweep. We've gotten a liquidity sweep being swept. It can be London high, it can be New York high also. So New York session can start by having an high, right? And you can sweep it and continue downward. Right. So either we have, but we must surely have a liquidity sweep. Either we have this kind of liquidity sweep or we have the London previous session. And as you can see, this is almost the same. As you can see. Right, so we must have a liquidity sweep first. And as you can see, we've gotten into an inverse fair value gap. What I'm going to do is put your stop loss. Normally, people will be like, put your stop loss to this or on this level right here, but no, I advise you put your stop loss on the previous liquidity sweep. And I target 2:1 and 3 ratio. That's why this is the best way I do is I open 2 positions with the same risk, but I open 2 positions. I close the first position at 2 hour, then I leave second one to, if it gets to 3 hour, I close it. That is an extra 1 hour. You get what I mean? So that is the best way. That is the best thing I do. So the second thing we did was actually look for liquidity sweep. Then the third we are going to look for right now is going to be looking out for our 2:1. 2:1 is going to be there. Then 3:1. All right, so the first thing is session, the second thing is liquidity sweep, then the third confirmation is either an inverse fair value gap or an aggressive break, right? An aggressive break. This is an aggressive or a displacement break. This is an aggressive break actually. You see the 5 minutes has a lot of 5 minutes. 5 minutes time frame has a lot of selling pressure right now. We have this very bearish. All right, and what we're going to do right now is we're going to wait for an impulsive break. Then if you see a fair value gap, we use a fair value gap, but you can use any kind of form of entry. So it can be that, if I see 3 to 4 aggressive sell or buy, I enter. If I see an impulsive break, I enter. If I should see, you can use any kind of confirmation, but confirmation I use is either an inverse fair value gap or an impulsive break. So if you don't know what an impulsive break is, I'm going to be teaching that in my next video. So for you to understand that, you have to subscribe to this channel and turn on your post notification just in case I dropped the video and you need to get alarmed. So what I'm going to do right now, let's play this out to see what it's going to do. All right, we are moving already. Scrolling. Our 2 ratio 1 almost got it. Our 2 ratio 1 got 8 right now. It just got 8. Well, during the process of it getting 8, we had another London session right now that is being created. Alright, so that is the Setandsecure strategy. Using GBP USD. So let's do that again. What session are we right now? We are currently in a London session. London session just opened. 8 AM London session opens. So what are we looking for right now? We're looking for a liquidity sweep. And so far we haven't gotten any liquidity sweep. And this sells. As you can see, no liquidity sweep. But what we have right now is an impulsive break. You can see we have this 1 hour impulsive break. We have a lot of sell candles that created this break. Ouch. That was too fast. Now, what are we looking for right now? Now, London session didn't have liquidity, but New York session just opened right now, and they what we call sell side liquidity. That's when we use the sell candle on 1 hour as a point of liquidity. And as you can see, on New York session opened and swept. This is the candle that opened during New York session, and as you can see, swept it. Swept that then that just it swept it. We don't know if it's a valid sweep or not, but all we know is New York session open has swept it. What are we going to use as confirmation? We're going to wait for an impulsive break. Right, I'm going to wait for an impulsive break, and this a break, and like I said, we can also use 5 minutes as a point of liquidity. Let's look at this also. This is also a liquidity. Right, the New York session opened with this candle. It went up to this point, went down to this point, and what do you see? It actually went up again. So this previous liquidity. Then the market is coming down. As you see. Right, so what are we going to do right now? We are going to wait for an impulsive break. We can actually say this is an impulsive break right now. Well, let's see. Actually, if I'm the one, I'll have entered from this point. Like, I love taking risk. I'll enter when I put my stop loss above this liquidity because I know this is a good liquidity sweep. So if I'm wrong, we get stopped up. But if I'm right, it's going to be a very, very quick entry. And we target to ratio 1. All I know is I put my stop loss in where I'm very, very confident in that if it gets stopped out, everything that I've analyzed previously is wrong. And as you can see, 2 ratio 1 got 8, and if I decide to wait for 3 ratio 1 or so, So ratio 1 got 8, so let's say about 3 ratio. Next session has stopped during this period. So what I do most time is once New York sessions end at this particular time, I stop. I remove if it's profit, if it's loss, I close it out, because the next session that is opening is Asian, and is a different place entirely. So I hope this video is impactful to you guys and you've understand some things about GBP USD and session. So session is one thing that people should really take serious. I do say this to my students. Session is something you guys should really take serious. And I think that's it for this video. Kindly like, share, subscribe, and turn on your post notification. And if you're interested in learning forex trading or you need a mentor, there's a 30 days bootcamp going on right now. You can text me on my Instagram, and we are going to know what we're going to do from there. So that's it for this video. I'm going to see you guys in the next video.